Welcome to Home Matters with Lyndsay, a podcast where psychology meets property to help you navigate real estate decisions and life's biggest home matters with heart, confidence, and strategy. I'm your host, Lyndsay Wrensen, Associate Broker, Realtor, and Industrial Organizational Psychologist. And here on this podcast, we go beyond the transaction to explore other areas like the people, emotions, financial decisions, and strategies that shape our homes, our wealth, and our lives. What if the same dollar could help reduce debt, improve cash flow, and support long-term wealth building all at the same time? That's exactly what we're discussing today. And in this episode, we're going to dive into the psychology of debt, the way most people think about paying off loans and strategies that challenge conventional thinking. And we'll explore how some homeowners are finding ways to pay less interest over time, improve cash flow, and put their money to work more efficiently, all without refinancing. We'll also discuss concepts many homeowners have simply never been taught and some of the strategies and systems that traditional financial institutions may not always take the time to explain. Joining me today is a dear friend, Mary, who is a financial strategist and wealth director who works with clients to help reduce debt, improve cash flow, and create opportunities for long-term wealth building. And together, we'll explore concepts that many homeowners have never been taught and discuss practical strategies that can help people make more informed decisions about their financial future. Whether you're a homeowner, an aspiring homeowner, or simply someone looking to make smarter and wiser financial decisions, this conversation is packed with insights that will change the way you think about money, debt, and building wealth. Let's dive in. Hey, Mary, how are you? It's so good to see you.
I am great. Good to see you too, Lyndsay. Thanks for having me today.
Thank you so much for volunteering to be on this podcast. I know we've got a lot to talk about, and our topic today is really interesting to me, especially as a realtor. How smart homeowners are paying less interest and simultaneously building wealth by using the same dollar twice without refinancing. So we're talking about the psychology of debt, cash flow, and a little bit about the bank as well, and some things folks may not know. So I'm really interested in diving into this. And I just want to start off with asking you a bit about the topic. What have you learned about the psychology of debt and how it impacts Americans financially?
Well, so that entire topic you just mentioned is a real mouthful, I realize, but it is going to be a very enlightening topic. So those of you who are tuned in and listening, definitely hold till the end because I think it's going to blow your mind. What I've learned psychology-wise, back to your question, is really we are culturally in a trap, I would say. We have fallen into the acceptance of things in our economy and our banking system that we don't even know to question. And in fact, because they've been around so long, we are almost afraid to trust anything else that might be contrary to them. But we have a way of, just accepting the way things are and not even considering that there's a better way.
Especially right now, this matters so much. The economy, definitely, a lot of people are struggling, so every penny counts right now. So I'm really interested in hearing more about this. And I know you meet with clients, so I'm just curious, when you first talk to people about their debt, do you tend to see emotional patterns? Are they more fearful to even look at numbers, fearful to look at debt?
They're definitely excited if it gets to the point where they're on a call with me, because something has spoken to them. Like I'll often ask people, are you paying your mortgage the old way or the new way? And they're wanting to know, I didn't know there was more than one way, right? And then say, you have the potential to pay off your 30-year mortgage in 1/3 to 1/2 the time and save hundreds of thousands of dollars in interest by paying it back differently without refinancing. And that overcomes enough of the fear to make them willing to come on. And at that point, they're excited to see what in the world am I talking about. So what I find initially, though, when people are initially hearing about it and deciding if they want to come and meet with me, is definitely fear, because it
Okay.
sounds too good to be true, right? And
Right.
again, psychologically, we, for whatever reason, right or wrong, we trust the system that we've
Well,
fallen
I
into
will.
believing for decades,
I
right?
think some of that is starting to, eyes are being opened,
Yes.
is what I'm noticing across various industries.
Mhm.
We're seeing it now.
It's
So,
like the Matrix, right? It's like once you see red pill, blue pill,
yep.
once you see the truth, you can't unsee it. So that's my invitation is
Yeah.
just come and see the truth. There is absolutely no obligation to do
Yeah.
anything other than see the truth, and then you can make an informed decision on the other side.
I love this. I love this. So now, in using this system that you obviously you connect with clients and they may or may not be scared to look at their debt or excited to see the possibilities, may be open to it. Now, before they implement your system or techniques that you share, and I'll let you get into that more later, do you tend to see that certain mind shifts have to occur before they can successfully use and implement this system so it's working? It works for them and they're seeing the fruit of that. Or what
Yes.
needs to change
Yeah, that, like
mindset
you
wise?
said, they have to be enlightened to see. And
Right.
that's what I do in the meeting, the initial meeting with them, is show them what's possible to really open their eyes. So we initially meet so I can show a brief demonstration of what it is we use. It's an online platform, actually, that has like 4.5 million lines of code. It does
Oh,
hundreds of thousands of mathematical calculations. Every time a financial transaction is recorded in it, and like if there's money to be paid toward debt, it
okay.
actually does like 740 different possible ways to use that money and comes out with the one that's going to cancel the most future interest for you. So I'm
Okay.
going to show you a demo of that. But then from there, I
Okay.
invite you to come and do an analysis of your own. That's
Okay.
where the real eye-opening happens, because it's your numbers, it's your debt, your interest rates, your how much is in your escrow, all of those
Right.
things.
Right.
And the math calculates to show an exact debt-free date. And that is what wakes
Okay.
people up and makes them see what is possible on the other side. And I can't tell you, Lyndsay, how many times I'll say, "Oh, yeah, I help people reduce
Yeah.
debt and build wealth." And they'll say, "Oh, well, I don't have any debt." And I'll
Right.
say, "Okay,
Right.
great. That's wonderful. Okay, so first of all, if you really don't have any debt, I can definitely show you some wealth building opportunities that you may or may not be aware of that could
Okay.
bring in you a greater yield on your investments with a safety net to prevent loss, and so your risk is limited, and also the ability to have, protection for your family in the midst of all of that. So we can get into that later, but here's what part of that psychology. I'll
Mm-hmm.
say, "Oh, so you don't have any debt?" And I'll
Right.
say, "So do you rent, where you live?" And they'll say, "Oh, no. Well, I mean, I have a mortgage and I have car payments, but I don't have any debt."
Well, mortgages
This
technically
is
a
the
debt.
psychology we're talking about. We are
Yeah.
conditioned to almost think that it is so normal to have. Here's what I've learned. We are
Mm-hmm.
conditioned at a young age to believe that if you don't have a college degree, you're not going to make it in life. Now, I'm not against college degrees, but it sets us up to believe that it's culturally acceptable to get out of college with tens or hundreds of thousands of dollars worth of student loans. Then we get married and take out a 30-year mortgage, a couple of car payments, and we'll say, "Oh, no, I don't really have any debt," because it's normal debt, normal,
Well, I will
acceptable.
say to interject there, it's catching up to us because now
Yeah.
the average first-time homeowner is 40 years old. And
Wow.
yep. And obviously as both a listing agent and buyer's agent, yeah, the people
Wow.
that, yeah. So many people are living with family, multi-generational living, just to save for that down payment to be able to qualify. So it's
Wow. Well,
getting
what I
tougher.
offer
Yeah.
could definitely help them get that down payment much faster. and be able
Okay.
to buy a home if they haven't yet. If they're dealing with the student loan debt and maybe vehicles or credit cards and things like that, we can actually get that paid down much faster, canceling a lot of interest and making money available for the purchase of a home.
Wow. See, that does seem too good to be
Yeah,
true to
it
be
does.
true.
But it's just it's what the banks really don't want you to know, because how do they make their money? Another name for interest is bank profit. That's how they make their money. So it's built
Mhm.
into the way society and the economy is run,
Correct.
and they've made it very culturally acceptable. But there's a better
And
way.
and not to say that mortgages are bad. I
Right.
mean, the
Debt's not
majority of
bad if you know how
Americans,
to pay it right.
yeah, I mean, the majority of Americans don't have, a certain amount of cash to
Mhm.
pay full cash. Certainly,
Mhm.
plenty do, but your average home buyer does not.
Right.
So most people need to have that mortgage in most cases. Now, there's one thing you mentioned that I wanted to say. This is not just for people who have a mortgage. So what if it was an investor that had, a huge portfolio and pays cash everything? Is this something that would benefit them, or is this, obviously they know what they're doing financially if they've built that portfolio and they know, they're paying cash. So I'm curious.
Absolutely.
Okay.
So
All
the
right.
platform does multiple things. It
Okay.
does pay down debt rapidly. It shows you, it's like a financial GPS system, and it does the math
Okay.
with your budget and your income and your debts. And it
Right.
does the math all the way out to the debt-free date, calculating the fastest route there. It
Now, is
doesn't
this
do it
just
for
paying
you.
extra? Is it just paying extra every month? Like I always tell people, yeah, when you first get closing day, if you pay a little extra, especially in that first year, it's gonna help you long term. You're still gonna have
Yes
that.
and no to that question,
Okay.
actually, because you are paying extra. But so say you get a little bit of extra. Should you pay it on the mortgage? Should you pay it on the credit card? Should you pay it on the car? Should you pay it on the student loans? What's the most effective place to pay the extra money? This is where there's 740 different mathematical calculations coming up with the best route. What is going to
Okay.
cancel the most interest? So here's what happens. We pay a little extra on something. We do not see the impact of that right away. So
Right, right.
next week, we're wishing we had our money, and we're
Mm-hmm.
saying, man, I put that extra money on that debt. I mean, I guess it helped, but I really can't see that it helped me. So then it
Mm-hmm.
makes you really not want to put extra on it again, because you'd rather have your money right now, right? So
I
when
get
you
that.
can
Yes.
when you can see the impact of what you're
Right.
doing, you actually have a dashboard across the top.
Okay.
Every time you do a transaction that cancels future interest, it starts to accumulate. So it's like having your own personal video game where
Oh,
you can see your debt-free date, you can try to beat it, you can see how much interest you're canceling. Because, like, say on a 30-year mortgage, you make an extra payment today, it's taking it off the back end of that mortgage. You don't
right.
see that right now, but you do in your online platform. So it
Okay.
also predicts your cash flow. So for the people with multiple properties and businesses, it is going to show them the most effective way to manage everything. You can categorize every transaction. You can get as detailed as you want or as basic as you want, but for those that like to run reports and for businesses and have all their expenses into different categories, you can have all of that done within your platform. You can create your own categories. There's existing categories. So you can also forecast. So say you want to buy another
Okay.
property, you can go in and add it and see how that's going to impact, how long is it going to
All your
take to pay that
expenses.
off
Okay.
based on all the other financial dynamics you have going on.
So
So
it
it
seems like it
has
shows you
multiple
the
functions.
possibilities
Yes.
too.
Yeah. So
Instead of,
so one
yeah.
last thing I'll answer is when it comes to the paying extra, you hear a lot of great ways of paying extra, make bi-weekly payments, pay an extra payment a year, the
Mm-hmm.
avalanche, the snowball. There's all these different ways. Think of it this way. You manually pick a way, and that's the only way you do it. And you probably will get discouraged. Something will happen and throw you off. And because you're not
Okay.
seeing the impact, you might grow weary and stop doing it. With our platform, it is determining every single time something happens. Today it might use one way, the next day it might use another way, the next month it might use another way. It is always going to look for which method. There's like 9 different banking algorithms taken into account within the software. So it is going to figure out which way is the most beneficial for you, which way is going to cancel the most future interest. So you don't have to think, you just literally log
That's
in
what I was
20 minutes a week, 20 minutes a week and update your transactions, which is really adulting 101 for our finances. If we don't
right.
spend 20 minutes a week with our finances, we probably don't have a good grip on what's going on. And our potential to build any future wealth is minimal because we don't have real control over what's going on with our finances. So it's very easy. We always say it's easy to use. It's hard to explain, but easy to
That's
use.
what I was going to ask you. Does this require being a rocket scientist? Because
Nope.
obviously, I'm guessing there's built-in algorithms.
Yes.
So once you see it, I'm sure it makes more sense. But it sounds like, wow, this is a lot of math. What
Yeah.
do I have to do? Am I
Well, factorial math, which I don't even fully understand the term myself, and banking algorithms. And these are mathematical
right?
engineers who have created all of this. So, with a
Okay,
huge testimony of their own from the past. The founder of this was actually at a very successful mortgage company, and he saw people coming in and refinancing
really?
like every 7 to 10 years and using the equity in their home like an ATM to take money out. And the bank says, oh, you're a good customer. I'll give you a lower interest rate and a lower monthly payment if you refinance. But what people don't understand is mortgages are front loaded with interest.
Yeah.
And I will just clarify, there is a place and time for refinancing that can
Yeah.
be helpful, but before you refinance, I encourage you to come and see me. Okay. But here's the thing. When people refinance, number one, you're paying closing costs on that. And number
Exactly.
two, mortgages are front loaded. So say a 30-year mortgage. Let's say the
Hmm.
mortgage payment is $2,000. Probably 1950 of that is interest in the
Hmm.
first year.
Yeah.
Then the next year, it changes by a few dollars. The next year, by a few dollars. It takes you all the way to year 21 to even pay
Oh,
off
yeah.
half of the principal. I don't know how banking math is that 21 is half of 30, but that's what happens. And so you
Wow.
are paying
21 is
almost,
half a, ooh, yeah,
you
that's
are
a
paying
powerful.
almost all interest on that. So by the time you get to year 7 or 10 and you consider refinancing, yes, and we make decisions based on interest rate and monthly payment, but I'm here to tell you that interest rate doesn't matter. And here's why.
Okay.
So if you have a $400,000 home at 6% and for 30 years, do you know at the end of those 30 years, you have paid back $863,000? That is
Well,
$463,000 worth of
I
interest.
definitely, even personally, I finance the minimum amounts, still
Yep.
interest.
And you end up buying yourself a house, you buy the bank a house, and we just think that's culturally
Hmm.
acceptable. And so there is a way to beat the bank and not have to do that. So what happens when we refinance then at year 7 or 10 is yes, we get a little bit lower payment and a lower interest rate. However, we just started that 30-year debt front loaded payments again. So now the majority of our payments, which we're starting to get into more principal by year
Yeah.
7 and some are now going back to being almost all interest. So between that and the closing cost, if you do the math, which this platform does,
Mm.
all the way out to the end of the payoff of this loan, you would find that through the refinancing, you actually end up paying the bank more money than if you wouldn't have refinanced, even though you had a lower interest rate and you had a lower
Oh,
monthly payment.
wow. And
So
I'm sure you have plenty of stories. So yeah, my next question was actually going to be, focusing on that monthly payment and interest rate. How does it create a false sense of
yeah.
security? And I think you pretty much explained that.
Mhm.
So who would this be ideal for, essentially? I know we talked about investors who own, you know, 3 homes to
Yeah.
20 plus.
Yeah.
Obviously a first-time homeowner could use it if they
Yeah.
wanted to.
Mhm.
First home, or who else would this,
So
anybody?
for the debt-free portion, it's
Yeah.
for anyone with debt, right?
Okay. Including a
Probably
mortgage, which is
probably
debt.
25,000 or more in debt. This would be a useful tool
Okay.
to pay down the debt faster. Um, this can be for someone who is struggling financially, barely, and you do have to have a positive cash flow, even by $1. And what I mean by that is your monthly expenses have to be at least $1 less than your monthly income. So you have to have something to work with for this program to work.
Right.
So if you're upside down right now and you have more expenses than income, it's not something that will work at the moment until you have more income. But we do have a great income opportunity as well. If somebody wants to consider becoming an agent with our company, this is not an MLM. This is like a real estate agent or with a
Okay.
broker
So
company,
do you
or
have to become a lender, or do you have to
no
go?
licensing required to
Okay.
help people reduce debt, and use this platform. Now,
Wow.
the other side of it, so this is for people who are really struggling financially that barely are paying their bills, right? They have
Yes.
just paycheck to paycheck,
And that's so many
because
people right
it
now.
manages cash flow and it really
Yeah.
helps you to see, oh, you're going to have a cash flow problem in 3 months. You can see what's going on with your money and be very on top of it.
So it's more
The
than just
other
like
side,
Credit Karma will tell me, okay, you've got this much coming in. You've spent a little additional in gas this month, for example, or at gas stations. So,
well, this is going to do so much more than that, because it's going to take every single debt at the right interest rate, everything that you have into account, every monthly expense. It has your entire budget listed in there. So you're going to have everything right at your fingertips. And I'll give you another example. Age-wise, this is great for young people. It's great for
okay,
middle age. It's great for elderly. I have an 80-year-old couple who purchased the platform, and she cried. They had about 10 years worth of debt,
okay,
and they ran their numbers, and they're paying it off in 13 months. And the other side of it is he's been having heart problems. And when he was in the hospital this past summer, he was worried, what if something happens
right,
to me? Because he pays all the bills.
right.
And, she doesn't even know what bills they have,
And
right?
that's a common situation.
Everything is
Yeah.
now inside this platform. So they showed it to their adult sons, who are now considering the program as well,
Wow.
because now all of the financial situations
Mm,
are in one place, and it allows them to stay on top of it
that's
and
great.
manage it easily. The other side of the coin is for people that don't have any debt, or they do. I can give you an example. Um, well, let me just say, in this 80-year-old couple situation, they had $62,000 worth of debt. It was like a timeshare, a vehicle, and some credit cards. But there was going to be $19,000 worth of interest charged on that over 10 years. So now they're only paying $1,000 in interest. They're canceling $18,000, right? Now, on the other side of
I'm
that,
sure
there's
that
someone I
feels
know.
good. And they can see the
Yeah.
date that they reach
Yes.
that. So it's like
There's,
you can see the light at the end of the tunnel, which is always
yes.
refreshing, like anything in
Yes.
life. You
Yep.
know, you see the end of the tunnel. Oh, I love
And
that.
another example is a couple that I know that I met and did an analysis with. They have a mortgage, a HELOC,
Uh-huh.
2 timeshares, and 7 credit cards. He's an accountant. He has
Oh,
tons of spreadsheets that he keeps track of all of his finances at home with.
kind of
So
how
he's
I do it.
very on top of his
Yeah.
money. And I will just say 74% of Americans don't even have a budget. So he was way ahead of it. And he feels like he manages his money very well. And he does.
Yeah.
He has about $2,400 a month of discretionary income after his bills are paid. So they're very comfortable.
Yeah.
They're not burdened by their debt. He didn't think to reach out to me because he's struggling financially
Yeah.
or anything like that. But he's a numbers guy. So he said, Mary, I see you posting about this. I want to know more about it. So we ran his numbers, his debts
And
based
this
on
is
the
an
banks.
accountant, correct?
Yes, yes.
Okay. So someone who
Based
obviously knows
based
what
on
they're doing.
on the bank schedule of his debts, they are scheduled to be paid off in 34 and a half years. Using my platform, he's paying it off in 8.5 years and canceling
Wow.
$658,000 worth of future interest that he otherwise would have paid if he paid it off over 34 years. So now here's the kicker, what I
Wow.
show them next. At the end of 8.5 years, when you're debt free, if you take that amount that you normally were paying toward debt every month, that you would have been paying for the rest of those 34 and a half
Mm-hmm.
years, and you put it even in a 1% savings account, but of course, you're
Yep.
going to put it in something more than that. Even in a 1% savings account, he'd have $3.5 million at the end of 34 and a half years instead of just breaking even and being debt free.
I'm sorry, you said how much? How much?
Three and a half million dollars, and that's at 1%. And of course, they're going to invest it at much more than 1%,
Oh,
which
yeah.
is the last piece I'm going to need to share with you about what's possible.
That's so instead of just
Yeah.
flat out breaking even, they're sitting on a nice,
They've
nice,
built wealth.
wow.
So the bank is investing your money when you pay them interest. And our goal is to free up your money so you can invest it for yourself. Every time you're making payments according to the bank schedule on any of these debts,
Mm-hmm.
you are giving away your retirement and your future generational wealth. And we want to capture
Yes.
that back into your family so that you have that for your
Especially
future.
now for families. I mean, last year, I think 40% of first home owners, mom and dad was their bank.
Mhm.
And hopefully that didn't come with the level of
Right.
interest that
Right.
the banks provided. But I do
Wow.
see a lot of people doing that and actually paying the parents back or,
Wow.
couples, young couples doing that
Wow.
and actually, so to build wealth, we want that generational wealth.
Yes.
So I would love to hear an example of actually the gentleman or couple that you just mentioned is a great example. What do you tend to see reaction wise when you run the numbers, when you show them the full picture? Are people freaking out? Are they excited? Are they scared?
So some are skeptical for sure, but I would say I
Okay.
wish I could record and show you the faces of some of these. Some break down crying, but it's confidential. Any meeting with
Yes.
me is always confidential. But I mean, jaw on the ground, eyes wide open,
I mean, just kind of
almost,
how I was
yeah,
about I'm like,
yeah.
wait, what? Break even million? It
And
just
I
went so
send them a
quick.
beautiful savings report explaining everything that I showed them during the presentation. They can take it, pray about it, go talk to
Wow.
somebody about it, share it with their spouse, invite their spouse back for another meeting to see it for themselves. Or I do encourage usually that any financial decision makers in the house are on the Zoom because it is important, to see. But the rate of return from using this product is exponential because of the amount of money that I personally would pay off my home in 6 years and cancel $250,000 worth of future interest.
So
So
you
that's
use it
really,
too,
I
obviously.
do. Oh, yes, most definitely. It's an incredible tool for managing your finances.
Wow.
And it's like having a little financial advisor, in your back pocket, if you will.
And I
But
sound like the accountant. That's me. I have
yeah.
all my spreadsheets. I'm looking at what's coming in, what's going out. As a realtor, we have to, obviously our cash flow can vary.
Sure.
Certain times a year I'm slower and
Yeah.
other times a year I'm much busier and it can
This would
swing
be
year to
especially
year.
helpful in that case because when
Yes.
income comes in, it's
Oh,
looking out
wow.
and it's going to show you it will not take money that you just earned and apply it to pay off debt if it
Yes.
sees you don't have income coming in again for
Okay.
sure right away
So
because
it
it knows
tells
your
you where to
bills that are
put.
coming. Right.
Wow.
Yeah, so it's a phenomenal tool. It works with people on commission, fixed income, works with people, on retirement income, any types of income. As long as you have at least $1 more income than you do expenses, we
Oh,
can
wow.
we can run an analysis for sure.
And I was going to ask you about DIYing things, but we kind of covered that
Yeah,
already. I mean, I think we covered
yeah.
that in full.
And so the last thing I'll say about that though is people are like, but if I could just understand the math, like it sounds too good to be true. How does it work? Like, how does
Yeah,
it
month to
do that?
month.
And my
But
answer is this. I don't have a clue how this iPhone works. All the math in here. I don't have a clue how this recording is working right now that you and I are,
yeah,
40 miles apart and we're recording this together. There's a lot of math going on. And if I had to understand it all before I trusted using it, I would never use it, right? So all I can say is the math in the program is guaranteed 100% money back guarantees. So the math will not fail. It will get you debt free at the date predicted
if you
or your
follow
money back.
and of course there could be life can come up, and I'm sure this tool, like the person you were discussing before, had a health situation. What if something
Mhm.
like that threw
Yeah.
off the algorithm, like a big, like I needed a new roof tomorrow?
Yeah.
Um,
You can put that in there and it will show you the best way to pay that down, the fastest way to pay it down, or how to pay it. And it really gives you peace of mind because I actually do that in one of my demos. I have this whole situation with this
Uh-huh.
family and they're so excited. Now they have a plan. They're going to build wealth. Uh-oh,
Right.
need a new roof. Let's throw in that expense that we didn't anticipate. Because in your
Mhm.
mind, you're thinking, oh, this is going to ruin everything. It's going to throw everything off. But it's like
Yeah.
the GPS. You drive off the wrong exit, it's just going to reroute you. And it keeps you on track toward your debt-free goal, your wealth building goals.
And I can see how this
Mhm.
can break fear mindsets too.
Yes. Mhm.
So, which is really healthy. I remember something in the past, I just didn't even want to look at the money situation. This was about 15 years ago. I was just afraid to look at it,
Yeah.
like put it on the back shelf for now. And eventually I did. And I felt so empowered when I did. So I can see how, again, seeing the light at the end of the
Yeah.
tunnel, debt free.
Avoidance is a huge problem financially.
Yes.
I myself have a testimony of making really, really good income, and there was plenty getting direct deposited, and all my bills were on auto draft, and there was a bunch left. And I liken it to having a baby. You don't just have a baby and bring the baby home and say, "Oh, how am I going to feed this baby? Where am I going to put this baby to sleep? Well,
You're
let me just try
prepared.
this. Hopefully this will work. Okay, let me just try that. Let me try this." No,
Right.
what do? You prepare for the baby. You
Yes.
do some research. You actually have a nursery prepared to receive the baby. That's what
Ooh,
we
I
need to
like that.
do for our finances and wealth. If you don't have a structure and a place to manage your money, you will not maximize what can be done with that money, and it will fall through the cracks. Because another thing that happens by using this platform is you see your spending habits. You don't have to change your lifestyle. If you go to Starbucks every morning and get a cup of coffee and you want to keep doing that, you can do it. You just put it in your budget and
Right.
not use that money to pay down debt. But I promise you,
Wow.
you'll be watching and you'll say, wow, this is incredible. What's happening? What if I only went like every other week or I mean, every other day instead of every day, right? And so
So I
little
could put
ways you
in
can cut your
vacation.
expenses pays off your debt faster.
Oh, wow. I love this. I'm thinking, what if I wanted a vacation and
Yeah.
I wasn't sure when the best time to go was? I could put that in there, say it was a certain amount,
You
and
can
have some.
forecast for it, plan for it,
Wow.
that you're
I
going to have
love
so much a
that.
year or twice a year or however you want to do it. You
I
can put
love
that into your
that.
budget. Yeah, absolutely.
Now, what does someone need to have in place other than obviously positive cash flow, at least a
Yeah.
dollar, in order for
Positive
it to
cash
work?
flow and a desire to change. So,
Okay.
you have to have the desire, if you have debt, to be debt free because it is going to require a change in your habits. If you don't
Mhm.
currently sit down for 20 minutes a week with your finances, you will have to commit to doing that for this to work. Okay.
20 minutes a
Um,
week.
yeah.
I could
Yeah.
handle that.
Once it's set up, your budget's in
Mhm.
there, your bills, your expenses, everything's in there. Then it's 20 minutes a week to keep it up to date. That's the average. That's the most common. Sometimes less than that.
So
And
do you
so
go in every day and look, or is
you
it just
can, you can. Look, I have clients that text me. They're like, "Oh my gosh, I love this." They're
a...
just they're I've been in there 3 times this week, right? Because you just are excited about it. It makes you enjoy managing your money
Oh,
because
I
it's
love that.
easy and you don't have to keep track of all these things that could fall through the cracks, like everything. If you can set your expenses to be, weekly, to be monthly, quarterly, semi-annually. You can, however you want to put things in there so you don't forget about those things that only come once a year or, everything is being forecasted in your finances so that they don't fall through the cracks. I'm one of those people that forgot to renew I got busy. I got the notice and I didn't renew the tags on my car because I just got busy and forgot about it. I got it in the mail and it got buried, right? And so it was several months later, I was like, I never even did that. But see, with
Wow.
this platform, it's on my action plan. And it's telling me, get your emissions and get your tag renewed. And it's got the dollar amount already forecasted once a year. And so I don't forget to do these things. So it's almost like having a little assistant reminding me of things as well. But
Oh,
it's very helpful.
does
But
it give
everything
you, for the stat nerds like me, does it
yeah.
give you any graphs? Because that's what I'm
Oh yeah,
thinking. I like
that's
to look.
all in there. And I am not that nerd and I don't look at all that, but it's all in there for those of you that are. Yeah.
I see, I love looking to see like groceries month to month, or where am I overspending? Where what could I cut out? Because I am one of those nerdy people that
Yeah,
likes to track everything, but
you can
I
absolutely do that.
okay, that's awesome. I'm trying to think if there's now back to this. How do people the back to the topic? I want what is use the same dollar twice
Okay, that is the
without
last part I
refining?
wanted to make sure we didn't miss. So, there is an opportunity with what I do. I am also life insurance licensed. There
Okay,
are high cash value life insurance policies that you can use, number one, to protect your family, number two, to build a cash value. And when that cash value reaches a certain place, you can begin to draw and borrow against that yourself, which it's your money. So
right.
you borrow your own money, but guess what? That cash value policy continues to
Like
earn
that.
because it's indexed, right? So it is
Right.
actually earning. And there's a cap on that. The average that I'm allowed legally to tell you is 6 to 10% usually return on that money. But
Okay.
there's a cap at the bottom of zero. So if the market bottoms out, you have a safety net. So it limits your risk and it's tax advantaged, which is kind
Yeah.
of the legal word for tax free. Okay, I'm not supposed to say tax free. It is tax advantaged, which means the money you're putting in there when you draw it out, it is tax free, unlike a 401k. So a lot of
Right.
people have
Mm-hmm.
401ks, but that 401k, again, let's talk back to the psychology and culturally acceptable ways of
Yes.
doing things. 401k is actually an IRS tax code. And there is a lot of hidden fees within that. And
Yep.
also, the money when you take it out at retirement, you have to pay
Yes.
tax.
I
And if you
actually,
outlive your 401k,
yes.
you will run out of money. So,
Wow.
with this high value, high cash value life insurance, permanent life insurance policy, you are building revenue, building wealth, building cash value, which you can actually get debt free. Here's how you use the same dollar twice. You take that money out of the cash value, borrow it from yourself to pay on your mortgage. So that money is still
Okay.
earning you over here because it's still your money. They continue to include it in what earns interest for you over here. But at the same time, you've just canceled with it, interest with it over here on your mortgage. So you have used the same dollar twice.
And
So
is
now
there
you
someone
have,
who's helping you make those
oh
decisions,
yeah,
or is the
we have
system
we have an
guiding
entire
you?
analysis that we enter all of your information in, run your numbers.
Okay.
You have a decision whether it's a good fit for you or not. We show you all of that, but basically what you end up with is if you die early, you have huge protection of death benefit for your family.
Hmm.
We also add a rider for living benefits. So if you get
Nice.
terminally sick, you can draw on that money to actually cover your expenses while you're sick. And if you live too long, that you would have otherwise, outlived your 401k money or whatever, this is income for life. And we
Yeah.
structure policies to help people have, three, five, 10, $15,000 a month in income draw for life
And I'll
while
just
they're getting debt free. That's the same dollar twice, is you can do them simultaneously. You don't have to get debt free first and then build the wealth. You can actually do them simultaneously.
what I like about this is you mentioned it's for future generations. And as you know, on this podcast, obviously my views are not the same as everyone, but I am a believer in Jesus Christ. And so stewarding our finances is something he wants us to do. And he wants us to be able to receive like you said, the baby.
Yes.
We've got to make a place, make room for what he has. So I see it as a form of obedience in stewarding what he has given you, especially if he is blessing you a lot and you don't have time to crunch a lot of numbers. Even as someone who with a background in teaching college statistics, I don't want to try to create algorithms today at this point in my life.
Right.
Not
Somebody's
it.
done all that work for you.
Yeah, I love this.
Well, I agree with that 100%. And I also am a believer in Jesus
Yeah.
Christ. And I will tell you that I believe fully he brought this into my life. I
Amen.
have an entire testimony of making great income and not having that structure to receive it, and having a turn in the industry I used to be involved in and see income come down and having nothing to show. And no retirement and no backup plan financially. And I just, many of us out there, there's no shame. We are financially illiterate. And there's a reason why, like, don't get me started. These things are not being taught in high schools and colleges, and they should be. And I'll tell you, there
I
are
agree.
people with MBAs and financial MBAs, 6 years worth
Oh
of
yeah.
college in finance that hear this and see these presentations and are shocked. They were never taught any of this in their financial
I was
education.
never
So
taught
this
that
is
either.
something that is life changing. And even financial advisors don't have these tools to help people. We have a lot of financial advisors that are becoming agents so they can offer this as well.
Very good to know. Very good to know. I certainly know
And a lot of
many.
real estate agents that are becoming agents as well,
And
because
hey, I'm sure some lenders
yeah.
even too.
And lenders, yes, help people get a
Really?
mortgage and get a home and then turn around
Oh,
and show them how to pay it off in 5 to 7 years.
oh, I love that. Well, I'll be sure that this gets sent to many of my lenders as well. This might be something they want to show their clients or, as an agent, if you're
Absolutely.
listening to this, then definitely I'm going to
And we
drop.
do have a very lucrative referral program
Oh,
too. So
okay.
if they just reach out, they may not want to be an agent, but
Yeah.
just for referring, simply referring, they can get a referral fee for that. So,
Well, that's good to know. And I'm sure you'll send me your contact information as well. So I'll drop this below.
yeah,
And I
it's a
just,
form, a link they can click on and fill
okay,
out. It'll come directly to me, and I'll reach out and we'll schedule a time to get on a Zoom.
wonderful. So it's as easy as that. And I'm
Yep.
guessing anyone who's, this will obviously people outside of, I know you live in Georgia as well as I do. Um, but in
Anywhere in the United States. Yeah.
the United States, perfect. Well, thank you so much, Mary, for this
You're
time
welcome.
together. I just love your story of how the Lord allowed you to go through a situation to open your eyes to what you have stepped into, to be able to steward the wealth He is
Yes.
providing you, and to help others and set them financially free in a way that literally your average person does not broadcast.
Yeah.
So I just thank you for sharing this. And whoever is listening to this, feel free to reach out to Mary to help build wealth and learn how to use $1 twice,
Yes.
if I'm saying it correct.
Yep. You got it.
Well, thank you again, Mary, and you have a wonderful day.
You too. Thanks, Lindsay.